Good morning. Welcome to Stock Market Today. It's Friday, April 17th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com /today, where you can sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas. Hits your inbox every trading day before the market opens. So U.S. equities finished mostly higher in Thursday's trading, ending near the best levels of the day. Healthcare and discretionary outperformed while energy and financials lagged. Treasuries were mixed with the curve flattening. The dollar was stronger versus the major crosses. Gold finished down 0.5%. WTI crude was little change, but remained below the $20 per barrel level. And as we get to the desk this morning, decidedly risk on tone following comments from the president last night. S&P futures are up 3%, and the index is on track to post a gain for the week. European equity markets were higher following strength in Asia overnight. Treasuries are weaker across the curve. The dollar is stronger on the euro cross, but a bit weaker against the yen. Gold is down 1.9%, and WTI crude is off about 4.5% on the heels of GDP contraction in China. So let's take a look at the S&P 500 here. Still dancing with that 50% retracement level, but futures have us trading towards the top end here, towards the 2850 level. As I look at futures trading here this morning, slightly above the 2850 level. Just want to get you updated real time activity, trading up here at about 2850, 2865. So within this resistance zone that we've been highlighting between 2800 and 2900, the 62% retracement is at 2932. So call resistance in the 2900 2950 zone. Initial support 2650, below that 2450. We do remain overbought based on the 13-period CCI and the 3-day moving average of that metric. However, Chaikin money flow is bullish. So bulls not ready to give it up just yet. Obviously taking some clues from the president's comments, as well as potentially positive commentary regarding Gilead last night. I won't say out of Gilead because the initial comments did not come from the company. So let's just see how we shake out here on the final trading day of the week and options expiration day. Our market in a minute now. What are we writing about in the note today to Chaikin Analytics clients? Well, SPY traded pretty flat near the upper resistance zone. We highlighted that. Large cap growth continues to do the heavy lifting. Look at names like Netflix. Look at names like Amazon. Look at some of the bigger semiconductor companies that are, more growthy. They've been outperforming. We'll look at how that shakes out in the here and now, though. Key themes remain mostly risk off. Pharmaceuticals are leadership in the leading healthcare sector, and as I said, futures do point to a higher open here today. Now, looking at things from a power bar perspective, gradually improving. The Dow was, call it flat yesterday, 3 bulls to 9 bears. S&P 500 up 42 basis points, 41 bulls to 151 bears. The NASDAQ, there's your large cap growth. Big outperformer, up 1.8% yesterday, 19 to 22 bulls to bears there. Small caps continue to underperform, down 81 basis points, 138 to 424 bulls to bears. Bonds uptick, sending yields lower. Healthcare has been a leading sector. It's one you've heard me pound the table on multiple times over the past couple of months, and it continues to be leadership. And we're going to take a deep dive into pharma today. Healthcare up 2.18% yesterday. Look at the power bar ratio for healthcare, 18 to 5, bulls to bears. According to the Chaikin power bar, small cap stocks and large cap stocks remain bearish. Let's take a look at our stock of the day now. Not auto-generated this time around. I'm highlighting it. Not because I think there's necessarily a trade here, but it's going to be on everybody's radar screen. Gilead, GILD, has a bullish Chaikin power gauge rating. Strong trend, strong industry group. And I think it's important to kind of dig in on what the news was yesterday. And as a human being, I think it's encouraging. The fact that their drug is showing signs of efficacy. However, I think it's important to also point out that it wasn't the company that released this news. It was released by a research analyst who spoke to a doctor who was overlooking the early stage clinical trial, right? And this is by no means an inclusive trial. There was not a control arm. Obviously not enough information here to say that the drug is actually going to be approved, but it's a step in the right direction. So just something to keep in mind. have an understanding of where your information comes from. Gilead, in the meantime, though, is overbought. It's an outperformer with a bullish rating. It is overbought. So, maybe give it time to digest this initial news and continue to monitor the situation as it stands here for Gilead. But it's going to be on everybody's radar screen today, and I think it bears watching how it trades throughout the day. Taking a look at our sector tracker now, the movement of the major sectors over the last 5 days, there's healthcare at the top of the list. Today's presentation is, today's show is going to be healthcare heavy, just a function of what I'm seeing and kind of what's generated. Tech also at the top of the list. Discretionary, thank you, Amazon. Comms, getting a lift from some of the bigger names in that group. And staples, the traditionally defensive area, still positive over the last 5 days of trading. Utes, industrials, and REITs are middle of the road. Materials, fins, and energy at the bottom of the list. So you notice that trends in motion tend to stay in motion. Energy's been an underperformer. You've heard me pound the table on that multiple times. Rallies are opportunities to open bearish or take some off if you went bottom fishing. I think the same is starting to become true for financials now. I'm not convinced that we've seen the low in rates, just based on the trends that are in place. And I think to the extent that rates continue to move lower, financials are going to continue to have that as a headwind. Let's hit our industry in focus now. Pharma services, which over the past 6 months has been an outperformer. This is using the XPH as a proxy, leading the S&P 500 by 9.25% over the past 6 months. Powerball ratio is weak, 6 bulls, 14 bears there, but it's currently ranked number 8 of 21 subsectors, having moved down 2 slots over the past week. So stock selection here does become important. You don't want to look at names like Reata with a very bearish rating, RETA, Revance, RVNC with a very bearish rating, or Axum, AXSM with a very bearish Chaikin power gauge rating. However, there are names in there that do look compelling. Take a look at a name like Eli Lilly. Eli Lilly has a bullish rating and a strong trend. Now, the industry group is weak as a function of that Powerball ratio being weak. However, Lilly has seen a topside breakout. So we have a bullish stock outperforming the market. Money flow is bullish. Stock trades above the rising long-term trend line, as I said. Now, maybe a little bit overdone here in the near term, but I think you have to have Lilly on your list, right? And as long as it holds this breakout level, you look for it to work off this overbought condition. And if that happens and you're above this breakout level, then it sets up a more compelling opportunity on the long side, as far as I'm concerned. And in the spirit of full disclosure, I do own this stock. I'm not adding to the position here, but I will be watching it, because if it does pull back and if it holds above, 147.5 and becomes oversold, I would look potentially, right? Everything changes day to day, but I would potentially look to add to the Lilly position that I do have. But if you're looking for leading stocks and leading industries that are parts of leading sectors, you want to be looking at a name like Eli Lilly, ticker symbol LLY. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. The gainer side of the board has a clear theme, and it is the managed care companies within the healthcare space. The United Healthcare earnings report was bullish. The analyst takeaways from that report were bullish as well. So UNH trades up nearly 6%. And then its peers go along for the ride. Anthem, Cigna, and Humana up 8.5%, 6.9%, and 6.7% respectively. Commentary out of UNH was bullish as it related to pricing on some products going into 2020. So that lent a bid to the group. The other name on the leaderboard here is Xilinx. It's a very bearish stock. However, they signed a chip deal with Samsung in the 5G space, which led to a 6.5% pop in Xilinx yesterday. The loser side of the board, a little bit thematic as it still relates to COVID. Retail sales data out yesterday, and other commentary about retailers, not paying their rent and potential bankruptcies, sent these REITs like SPG and Regency down hard on the day. SPG down 13.25, Regency down 10.25. KIM was downgraded at Compass Point. That stock is very bearish here at Chaikin Analytics, and it lost 12.67% yesterday. United Airlines further reducing capacity going forward, takes 11.5% out of that stock. Oxy, nothing company specific in this very bearish stock. However, oil under $20 a barrel. Energy space remains a mess. Oxy down 10.36% on the day yesterday. So let's dive in. Let's dive in now to the key themes. One of the key themes for us for a long time has been slowing global growth. And what does that mean for equities, right? And one of the ways that I like to measure global growth, because I am not an economist, I look at the market-based metrics. And one of the best ways that I think to measure, what investors are sizing up for the global growth picture is to look at the copper to gold ratio. Copper being an industrial metal widely used throughout the economy, gold being a precious metal widely used in times of strife, if you will, as a safe haven asset. And you've seen copper underperforming gold. Now, this chart goes back about a year. However, this trend has been in place for over a year and a half, right? And in that time, what you'll have noticed is yields have gone lower, right? So correlation between this relationship and yields. At the same time, when we get to the next chart, you'll notice that growth has been outperforming value. Our thesis is that in a slowing, or no growth world, investors will favor the growth portion of the equity landscape. That's largely been the case. Just look at the Qs, right? And outperforming the way they have for some time. But what's interesting to me here is that there are some signs that this downside might be waning in the near term. The trend is still very much down, below the 200-day moving average. However, notice how the most recent low in the ratio was met with a higher low for the RSI. Notice on this low, the RSI did not become oversold. So that's a bullish divergence. That to me is an indication of downside momentum. What you'd want to look for now is the potential, if it broke through this kind of the top here, this near-term top, as a sign that this trend could be changing, right? Could be, right? Nothing guaranteed in this market. We're going to monitor it closely. But if that is the case, if that happens, that's an environment where we would expect yields to go higher. Not my base case. I do think yields are likely heading lower from a trend perspective. But, near-term puts and takes, you could see some day-to-day and even week-to-week activity in some of these relationships. And then you have to start to flow through what that could mean within the equity landscape, right? So here, right, the flip side of that, here's growth versus value. The Vanguard S&P 500 growth ETF relative to the Vanguard S&P 500 value ETF, making a new high yesterday for the ratio. Now, what I will say is we are somewhat extended from the 200-day moving average. And while remember the positive divergence down here? Now you have a negative divergence or a bearish divergence, as this new high in the growth to value ratio was not met with a new high in the RSI. In fact, the RSI did not even become overbought, right? So to me, that signals we could see a pause here in the near term. Again, the trend is still very much higher. However, in the near term, you wouldn't be surprised to see maybe a little bit of backing and filling, a little bit of consolidation. And that coincides with the Qs reaching a peak relative to the S&P 500. So you see how these relationships play out, right? You see why it makes sense and why it's important to pay attention to the trends and the themes that are going on in other areas of the market. I know most people are predominantly focused on equities, but I think it's really important to be paying attention to the themes that are playing out and the trends that are playing out in other areas of the market, and watching, because a lot of times they will turn beforehand or they'll turn coincident and provide a level of confirmation. So just something to pay attention to. These are the types of things that I'm looking at each and every day. And I think that if I can kind of help you add some of these tools to your toolkit, then I think I'm doing a good service for you. Finally, Pharma. We said we talk about Pharma. Here's IHE, the iShares US Pharma ETF, retaking the 200-day moving average above the 50-day moving average. Now, it is overbought in the near term based on this 13-period CCI, but look at the relative strength against SPY. IHE has a bullish ETF power gauge rating. So as I think about, areas of the market that could continue to do well, healthcare, pharma, right? Here, top-down approach. So to me, I think you need to be paying attention to the pharma landscape. That'll wrap us up for a Friday morning, folks. Head over to shakenanalytics.com/test drive to sign up for a free 14-day trial. Be well, stay safe, Have a great weekend.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.